Welcome back everyone. So as part of this growth-based series, today I'm going to be focusing on Netflix. I'm going to be explaining why the company is overvalued and equally why I'm planning on buying into the company. Now I have the random number generator on the screen. The goal like for this video this week is going to be 46. Now Netflix doesn't require an introduction, but the way that they make money is purely based on subscriptions. There are no ads on the platform, but a subscription-based business is definitely profitable. And so as long as you have a high number of customers and those customers are actually subscribed, then every month the company generates revenue, and assuming that the customers grow year on year, then it can be a very profitable business. Now I want to first explain why I believe this company is overvalued at the moment. At the time of recording, I have a price point of $540, but just to run through some numbers, to date, we have 37 million customers that are actively subscribed to the platform. Now, in terms of the plans, we have basic, standard, and premium. The basic is, of course, the cheapest, but resolution is not that great. The standard is generally okay for the majority of people. And then there's premium, which has 4K content. Now, these are the prices in the UK, but I'm just going to switch over my VPN just to see the prices in USD. And so just connecting to the Los Angeles server, hitting a page refresh, we can see that the price is from $8.99 all the way up to $17.99. Now let's just assume that all the customers that are currently subscribed, so all those 37 million customers, let's imagine that they are all on the basic plan at $8.99. Now of course this is not the case. We're most likely going to be close to an average consisting of the standard price, and so these numbers are at the low end of the spectrum, but taking 37 million and timesing that by $8.99, but per month we have close to $333 million. Now, if we times that by 12 to get the yearly gross amount, that gives us a figure of very close to $4 billion. Now, of course, we have the likes of the Netflix original content and any contracts with the companies, and then the hosting fees as well to stream all this different content for the viewers to see. And then on the likes of Trading 212, we have certain key figures. So if we look at 2020, for instance, we have a net income of 2.76 billion. Now, the reason why this company is overvalued is because if we check out the market cap, and so this is the number of outstanding shares, and then multiply that by the actual value. In this case, it's $540.50. And so let's just imagine, for instance, that Netflix no longer grows, but they manage to retain all their customers and they pay this $8.99 every month. So this 2.76 billion, if we receive that in 2021 and 2022. And so to work out how many years it would take for a company to reach its market capitalization, you can take the 247 billion, we're going to divide that by the net income, so 2.76 billion, or in other words, 247 divided by 2.76. Now that gives us 89, and if we want to round up, so that is actually 90 years for the company to reach its current market capitalization. Now fortunately, Netflix is not a company that is sitting idle, it's grown year on year. And so if we click on the full income statement here and we check out 2018 for instance, scrolling down, we can see that we had a net income of 1.21 billion. And then in 2019, we can see the increase, so from 1.21 billion all the way to 1.87 billion. Now, if you work that out, that equates to a 54.55% increase. So over 50% increase. And then if we take a look at the difference between 2019 and 2020, so for 2020 we had 2.76 billion, and that gives us an increase of 47.59%. Now, although I'm just using the results from 2018 to 2019 and then 2019 to 2020, just to make the numbers easy to work with, I'm going to assume that the company is growing at a rate of 50% year on year. And so if a company grows 50%, then we assume that all the work that they've done before is multiplied by that factor. Now, because we're working with growth-based companies, the net income is reinvested into the company. And so a growth rate of 50% year on year, we can actually reach the market cap within 11 years. And of course 50%, that's actually a higher percentage for the next 10 plus years. If we believe that the company will have more of a 30% growth rate, then you'd need additional years to reach the market cap. And so hopefully I have convinced everyone that this is a company that is overvalued. Many growth-based companies are overvalued because the current price is a reflection on the future of the company. And so if Netflix is overvalued, why is it that I'm still going to be investing into this company? Well, simply put, Netflix has a really scalable approach. Of course, as they grow to more users, there's going to be additional costs that haven't been factored into my analysis. In terms of the overvaluation, For growth-based companies, if they can reach that valuation in around 10 years, then it's not as overvalued as other companies out there. The market cap is a number that can be achieved in the somewhat distant but near future. We also have to think about the transition from standard TV, and as the age demographic pushes forwards, then there's naturally going to be more consumers that are trying to consume content that is subscription based, given that the choices on what to watch and the recommendations are just much more user friendly. So it's easy to picture the demand for Netflix for future generations is just going to fuel this growth for subscription-based content. Now, there are other companies out there. We have Disney Plus that is offering a subscription-based model. Provided Netflix can keep their range of content and grow the catalog for different demographics out there, then Netflix will be able to retain their position as the leader in the market. Now, before I wrap up, just to call out that I have a small amount of investment into this company. I'm going to be using the likes of Etoro to purchase a larger amount. I'm happy to share that in a future video. It just so happens that the price that I'm willing to buy at has not been met just yet. Now, I suspect that there will be a buying opportunity around the $518 mark. I'm going to dollar cost average while the price hopefully goes in a downward direction. If anyone's interested in how I analyze growth-based companies, I'm going to be providing future videos. I'll be focusing on the basics, so the likes of the most popular types of oscillators out there. We have the EMA, MACD, simple moving average, and then the RSI. And so future videos will be exploring all of these types of technical analysis tools that exist out there. If you're new to the channel, then consider subscribing. I cover the likes of dividend-based, growth-based investing. As you've seen in this video, there's an emphasis on fundamental analysis, and in future videos I'll be looking at the technical analysis. And for all those new subscribers out there, it's really great to have you on board. And so the question I have for you all this week is, do you plan on investing in Netflix with a price point in the hundreds of dollars? So let me know your thoughts in the comments below. New videos are posted each week, and with that said, I'll catch you in the next one.